Hi, Zimi. Finally managed to record the videos, so we're just gonna go straight to it. Okay, so I've decided to incorporate the explanation of the what is it or what manufacturing is by making use of this question, which is, yeah, it's part of the question pack that I have. I'll send it straight to you, don't worry. Okay, but the most important things are the ones that have been highlighted here. So that's the reason why I wanted us to do this question. So 1.1.1, they say prepare the following notes to the production cost statement. You get it? So we need to prepare what the notes. Right. So which notes are they looking for? They want the direct or raw material cost, right? And then they want what? They want the direct labor cost as well as the factory overhead cost. And then only then can you do what? Prepare the production cost statement. Don't forget, these notes are very important, very easy, but at the same time very important. So if you are able to master these notes as they are and try to understand and also how to use maybe units. Let's say maybe they have a direct material per unit, you get it, and then they're giving you how many units per purchase. So you need to figure out, be able to work that one out. Then it should be easy. Like I love manufacturing because it's very easy and straightforward. You just need to know what you know. Otherwise, most of the methods on how to calculate, you have mastered them from the other topics that you have been doing. Okay, and then 1.1.3, they say calculate the unit cost of production per plastic being completed. So here they just want what the unit cost per good completed. You get it? So each unit that has been completed. So how much is it going to cost per single item at the end? So it means that we most likely to use our finished goods amount here. Okay, before we go straight into the question, I want us to do what? To go back and touch basic, because basics are also very important. Okay. Mm, wow, I deleted something here by mistake. Okay, it's okay. So with this information here, it should be easy for us to work it out because okay, so this is how your production cost statement usually look like, right? You have what? You have your direct material cost, which is your note one all the time. Um, and then you have your direct labor cost, which is your note two. And then you know that if you add your direct labor cost with your material cost, you should be able to get what? Your prime cost. You get it? Sometimes they won't give you the statement or require you to calculate it using the statement, but they'll ask you what is the prime cost, or you get it, of this business. So you need to figure out and just know that prime cost is always equals to direct material cost plus direct labor cost. So it's both of them direct. You get it? You don't have to include anything to do with indirect material purchase or indirect labor. You get it? Because if we're talking about the direct cost, we talk about if we're making a car, what is the direct material? You get it? In a car, most of the time, like the tangible material is most likely to be what is it? The steel or whatever that you're using, you get it? And then for the labor, you will find out that there are factory cleaners versus the engineers, for example, you get it? The engineers that are making the cars, we call them what? They're direct because they're the ones that they touch the product, they make the product, you get it? Compared to the cleaners, they don't touch the product, you get it, but they still help out in the production, but their only duty now is to what? Is to clean, you get it? They make production possible, but they are not the ones who are directly involved in what? In the production. Clear? Out of the way. And then now we move to what? Factory overheads. Okay, so factory overheads, I've also like included a note here. So factory overhead is all the things that have to do with the factory, but not directly related. I don't know if it makes sense. So the factory cleaners that I was talking about, we put them here. Remember, all the other expenses that we incur as a business or as a manufacturing business to keep the show running. You get it? So we have a factory, right? If we have a factory, we need to do what? We need to pay rent for the factory. You get it? So we have to put what? Rent. So the rent is what? Is our factory overhead. That's clear, right? Sundry expenses can be any other expenses that have not been like written as in like they have their actual name. You get it? Electricity. We have to pay electricity for the factory to keep it running. You get it? Depreciation. We have equipment. We have all these things that we're using in the factory to that have like a depreciation value. You get it? The plant, the equipment. You get it? Don't forget, when you're talking about plant, we're talking about what? We're talking about that thing that has been maybe constructed in the factory to make the things work, function. You get it? Maybe the generators or whatever. Yeah. And then we have what? Salaries and wages. The salaries and wages, don't forget, it's what? It's the indirect labor, no, indirect labor. You get it? Factory cleaners, factory foremen, yeah, everything to do with the factory. We put it here. And then consumable stores. Consumable stores, don't forget, consumable stores is most likely to have what? An opening and a closing. And then maybe consumable stores that were bought during the year. You get it? So you have to substitute that. Obviously, you say opening plus, sorry, opening plus current year, yeah, right? Then minus closing. Easy, straightforward. Okay, direct labor cost. Okay, so this is note number 2. Direct labor cost is also very easy. The only thing that you know is that you're focusing on the factory wages. Very important thing is that like it's not just gonna be like this. You get it? You might have to add a line item here. Let's say the UIF, right? The pensions, right? So these are also other things that you have to take note of, but we only ones that are applicable to what? Direct labor cost. And then we have what? We have the direct material cost. So direct material cost is also like pretty straightforward. So the things that are included in the direct material cost, we talk about the opening stock, right? What did we have in the previous year? You get it? That was left over. Net purchases. The net purchases here, it can be like a few line items here, whereby we're talking about how much stock was bought during this year. You get it? We bought stock for this amount of money this year, right? Let's say maybe what the stock that was bought this year, there was like defective items. We bought certain things, maybe they were not in the proper size or whatever, and we ended up having to do what? Take it out of what we bought and we return it back. Sometimes we buy fabric and it comes not in the color that we wanted. You get it? And we have to do what? Return it back to the suppliers. And as we return it back to the suppliers, what happens? It reduces, obviously, right? So we have to do what? Take it out, and then it reduces the value that we bought them for. You get it? Yeah, that's clear. And then carriages and purchases. Carriages and purchases like the transport to transport the goods from the supplier to the factory. You get it? Sometimes you may include things like custom duties. You get it? You bought it outside of South Africa and then you have to pay what? Custom duties. Custom duties is tax, obviously, and then it adds more cost in terms of like the material cost. And then after doing that, don't forget we add all of this and then now we have what? The total here. And then we always minus the closing stock, because out of the stock that we have in the business, this amount has not been used. You get it? So we have to do what? Take out what has not been used, and then we'll get what? The direct material cost, which is what? The value of the stock that has been used during the year. There you go. You have your production cost statement. You have what? Your manufacturing. So that's it in a nutshell. Easy, straightforward. Okay, so next video, we are starting with answering some of the questions. I hope you're ready. Hello. So we are continuing where we left off. Okay. So with the question here, okay, 1.1.1, they say prepare the following notes to the production cost statement. And then they're saying direct or raw material cost. Okay, so this is the very important one, which is like we prepare the what? Either direct or raw material cost. So they didn't specify, but you know it's direct material cost, right? Okay, so we have been provided with information here. It says units produced 58,000 bins were completed during the financial year. So this were completed. So this is what? This is most likely to go towards your finished goods. Okay, that's out of the way. Okay, here they're saying stock balances. So they've given us stock balances, which was like 1st of March 2008. This was like when we opened, when we started. You get it? So we have our what? Our raw material at the beginning. So we'll take 58,900. 58,900 as our opening. Okay. Oh, okay. Let's wait for the computer. Okay. So first thing first, we'll put in our opening, right? Stock. And then we will move on to, okay, because we have the information, my advice for you is to just put the figures that you find there as soon as possible. So here we'll say 50. Oh, God. So this was my problem with the laptop on Sunday. It just kept giving me a headache. So it's 58,900, right? Okay. And then we were also given it's 57,900, yeah. And then we were also given the closing stock, right? The closing stock is 34,200. So 34,200, which is going to put it there as well. 34,200. Oh, my laptop is protesting. Okay. Okay, so we have those amounts. So now we can move on the net purchases. Is there anything else that was highlighted from the information provided? Yeah, so that's it basically. So, hmm, so the next information that has been given to us now is transaction for the year. Right. So let's check in the transaction for the year. So they're saying raw material purchase for cash and on credit. The saying is 1,622,700. You get it. Is there anything related to the material purchased during the year? They're saying defective raw material returned to suppliers. So this was returned back to the suppliers. You get it. So it means what? It was defective. So we have to do what? Minus it from the purchase. Okay, so we'll say 1,622,700. Okay. 1,622,700 minus, I think it's 23,400. We'll double check 23,400. Okay, let's double check if it's correct. It's 23,100. Okay, in the meantime, you can start calculating to find out how much is it. If you say 1,622,700 minus 23,100. Okay, I get 1,599,600. Okay, so far so good, right? Okay, and then now let's see if they have any carriages on purchases. Okay, so here carriage on raw material purchase, they do have it, which is 28,800. Okay, 28,800. Okay, so you are more than welcome to start calculating now how much you are getting there. Remember, as you calculating here, adding, you're not adding the 34,200, right? So we're only adding the ones there at the top, just so that we're clear. So my total here, it should be some. Oh my God. Okay, so the balance that I'm getting here is 1,686,300. Okay, so with that, then you will then say minus closing stock. The closing stock is 34,200. And the amount that I'm getting is 1,052,100. Oh, this is taking forever. Okay, so here we got one million 686,300. And then this one, okay, so this one is going to be minus K, and then one million 652,100. So this amount will go straight to our production cost statement. Okay. So in our production cost statement here, we have 1,652, sorry, 100. Okay. And then now we can move on to our direct labor. Okay. So direct labor here, we have different salaries here. We have salaries, and then we have factory foreman, right? And then they're telling us how much is for the factory foreman. And then we have what? We have office workers, right? And then we have what? We have factory workers in the production process. Okay. And oh, they've given us more information. They say see information 4 below. Okay, these are things that you have to pay attention to. They have told us that there is a factory foreman here. You get it? So factory foreman is what is not directly related with what is it? They are not like in the direct manufacturing of the product. You get it? They are part of the factory, but not directly related to the product. So it's not part of our direct labor. Same as office workers. Office workers are office workers. And then here we have information on wages. We have office workers. Office workers are office workers are very safe. And then we have information which is beneficial for us, which is factory workers in the production process. They're saying we see information for below. Okay, so this is what we're looking for. And then they're saying UIF contributions to the allocated to each of the cost account. Then they have factory workers in the production process. So that's the very important thing. They form part of the direct labor. Okay, information for below. Okay, so they've given us information about the factory workers, how it works out, right? They're saying factory workers in the production process. They're saying number of factory employees working directly on the beans unchanged throughout the year. So we have how many employees? 12 employees. Okay, so we will say the 12 employees. You write it down, you highlight it, it's up to you. And then they're saying number of normal hours worked by each factory worker during the year. So normal working hours, we mean what? We mean the 40 hours a week, right? So that's the normal one. Remember, overtime versus normal working hours are not charged the same. I don't know if it makes sense. So you will say 12 multiplied by, 1,600 hours. Okay, so that's how many. So basically it means what? We say 12 employees multiplied by 1,600 hours. So they're saying number of normal hours worked by each. So one works how many hours? So the total of hours that all of them have worked is 19,200 hours, normal hours. Okay, so after saying this times this, then we'll multiply it by the normal working wage rate, which is 60 rand. So multiply by 60 rand. Okay, remember, we are not considering what the overtime for now. So we'll just do it separately. Okay, we'll just do it separately and then come back to do the other one. So 12 times 1,600 times 60 rands per hour, right? And then plus what? 240 times 12 times 100 rands. Okay, if you add this together, you should be able to get 240, this is overtime, don't forget, times 100. Okay, this is the amount that I'm getting. Are we done? Let's look at the most important thing as well, which is the highlighted what? They highlighted overtime. Sorry, they highlighted UIF. So here we're going back, we're saying UIF contribution to be allocated to each specific cost account, right? They're saying factory workers in the production process. So this is what? Okay, so from the previous podcast, from the previous video, we were able to work out the cost of direct labor. Remember, we said what? We said normal working hours, which was for 12 people, for 160, 100, 1,600 hours multiplied by 60 rand per hour, right? And then we said plus their overtime. Overtime was 240 times 12, which is 12 people times 100 rand. And then we said plus what? Plus UIF. Yeah, we were given UIF, so it should be straightforward. And then when you add everything, you're getting this amount, 1,451,520. So this amount of money, it's the total here. Obviously, you don't have to allocate it like this. You can separate it, like maybe have a line item here, which is overtime, and then have another line item, which is your UIF. It's up to you how you do it. And then this entire amount, it's what? It's our direct labor cost, the one that we have to put here as part of our direct labor cost for the production cost statement. So with that said, then it should be easy to work out our prime cost. As you remember, prime cost is more or less us saying okay, this is not what I wanted. Okay, so it's more or less us saying direct labor plus what? Direct labor plus okay, direct labor plus direct material. Okay, so I was just trying to find out if my Excel can do the calculation for me. So you are more than welcome to pause the video at any time and do the calculation. So if you say 1,652,000 plus 1,451,000, then you should be able to get 3,103,620. Okay, that's clear. That's out of the way. You get it. Let's find out if we can work out this note here, the one at the bottom, which is also very, very, very important. Okay, so it says consumable stores on hand. Okay, consumable stores. Remember, consumable stores has three things to take into consideration. Like we said, it will depend obviously on information that you have been given, but usually they'll have maybe opening, current, then closing. Okay, consumable stores here. I'm not seeing any consumable stores. Okay, for now I don't see any consumable stores. Let's see if there's anything that we can add. The salaries, right? Factory foreman, as far as I remember. Okay, there is a factory foreman, which is 241,000. And then there's also wages, office workers. No, we're not given anything about the office wages, and it's not related. It's not applicable. So we will say what? 241,000, which is the for factory foreman, and then factory foreman UIF. It's 2,700. Okay, so we will say what? 241 plus, okay, 241 100 plus 2,700, which is their UIF. Okay, and then if you add this together, you should be able to get 248. 248. Yeah, it's 243,700. Okay, and then Is there anything else? Let's see. They have factory indirect material purchase. So anything indirect will go straight to what? It goes straight to our overhead. So this is indirect material purchase. So we didn't include a line item for it, so we'll add a line item here. Okay, indirect material. Okay, so let's see if there's anything else that we have to take into consideration. Then we have what? Well, we made a mistake here. I don't know if you notice here. The figure for factory foreman is actually 2,410. But anyway, if you're doing it on your side, please correct the figure here. Okay, so it's gonna affect everything, but because I'm recording and I don't have time, I won't be able to do it, but please make sure that you correct it. Okay, so it says here, what else do we have? We have commission to salesperson, we have advertising, we have factory maintenance. You see, this is very important. Factory material. So it's 85,000. Factory maintenance. Okay, factory maintenance. So that's 85,000. Okay, so we are doing really, really great. Okay, and then it says rent to be allocated in portion to floor space. Okay, okay, before we move, okay, so it looks like, what is it? Rent as well as water and electricity is going to be allocated according to like, yeah, space. Okay, let's see if we have any more information before we go to the big ones. So we have depreciation, which is 52,000. Okay, 52,000. And then we have sundry expenses. Sundry expenses. Okay, we have sundry for administrative, and then we have sundry for factory, which is 25,000. So we will put 25,000 sundry, 25,000. Okay. And then now we can work with the big dogs, right? Which is electricity as well as rent. Also, actually, it's not so hard. You just need to know, like, if you've mastered your calculations in what is it, like the first few months, then this should not be hard. So this is total rent that we have, 133,000. Okay, with the total that we have, 133,000, they're saying these are the floor spaces that we have. So all we're gonna do is that we'll add all the floor spaces, which is divide this by the total of all the floor spaces. Okay, so rent, it's going to be like this. We say the factory, which is what we're looking for. So in terms of our calculation, it's always going to be at top and then divided by all of them. So 1,200 plus 600 plus another 600. You get it. And then these after whatever that you're getting, you will obviously then multiply it. You will multiply it by 1,300,000. Okay, so this is the amount that you should be able to get. Whatever that you're getting here, that's the amount for this side. Okay, so if you add together, you will say you are more than welcome to pause and do the calculations yourself. So the total of these three is 2,400, right? So if you say this is more like saying 12 divided by 24 and then multiplied by 133,000, and you should be able to get 66,500. Okay, and then electricity. Let's find out how they've apportioned electricity. So for electricity, they're saying 15% of the amount is allocated to the office, 25% to the sales department. The rest applies to the factory. So basically, if you say 15 plus 25, you are getting 40%. So 40% is for the rest, and then 60% is for what? Is for the factory. So 60% goes towards the factory. How much was it allocated in total for electricity? We're going back and finding out what on electricity they're saying, 36,000. Okay, so it means what? 60% of the 36,000 is for the factory. So we'll say 60 over 100 multiplied by 36,000. Okay, you are more than welcome to pause the video and work it out. Okay, I am getting 21,600. Okay, so once you have all these amounts, then your work now is adding everything together, right? So you just say hey. That took me forever. Okay, so now we have the amount. How much is what? How much is the total here, right? So now the only thing that I'm doing, I'm just gonna take the total and put it straight into my production cost statement. Yeah, and just like that. Wow, doesn't want to work out. So how much was it? That's 619,700. Okay, and then now total manufacturing cost. Total manufacturing cost, that should be a sum of these two. Okay, so this is the last one that we're doing. Okay, there were a few things that we didn't do right that I wanted to correct, and I felt like it'll be very important that we do it together, the corrections. Okay, so here, if you remember, we decided to put the indirect material cost as it is, whereas actually we are actually supposed to take into consideration the opening as well as the closing balances of the indirect material. So if we go back to the information that has been provided to us here, they gave us, like they said, factory indirect material, which is 8,100 as well as 7,400. Okay, so this is an error on the examiner side because they didn't indicate whether this is money, monetary, or just like amounts, as in like number of beans that are left over or number of whatever material that was bought. You get it? It doesn't say whether it's money or it's units. You get it? So this is actually money. So it means what? It means that if it's an indirect material, we are going to say opening balance, which is 8,100 of the indirect material, right? Plus any purchases. The purchases that we had was 24,900 for factory indirect material purchase, right? And then obviously we have to do what? We have to minus the closing, which is 7,400. So if you go back here, we have the 8,100 plus the 12,900 minus what? The closing. Remember, this is similar to what we were doing. What happened? Okay, anyway, this is similar to what we were doing in the first note, if you still remember. We said what? We said obviously it's going to be opening plus anything that happened during the year, right? Minus what? Minus the closing. Okay, so the figure here we're getting is 126,600. Okay, I hope this helps you out, and also always DM when you have questions and then we can see if we can go through it. I also corrected the error that we had here for salaries and wages. If you still remember, we put 2,700 instead of the 2,410 that was there on the figure. So it gives us 243,410. So add everything together, you get 620,110. So now we have all the information that we need for the production cost statement, which means that everything should be easy for us, right? Okay, so if you notice here, we obviously were able to work out our direct material versus our direct labor, and then we got our prime cost, right? And then the factory overhead cost is exactly this total here. This total here, we took it as it is and we put it there. You get it? And then now that we have this, we can calculate our total manufacturing cost. Total manufacturing cost is what? Is prime cost, this amount here, plus what? Plus factory overhead cost, which is this amount here. You get it? And then now we can start working out the work in progress at the beginning versus work in progress at the end. Okay, so we go in back straight to the information that we were given here. They say work in progress stock. So on the first, when we open our books, we had 169,500. So 169,500. So this is the beginning. 165,000. Oh, I forgot the amount. Okay, I'm gonna go back just to be sure. 169,500. 169,500. Okay, so this is at the beginning, right? And then we have what? We have at the end, right? So Okay. At the end we have, how much was it? It was 120,600. So 120,600. Okay. So this is what? This is the closing balance. Closing balance is usually what minus, ne? From what? From like from the total, obviously. If you notice here as well, like our direct material workings, we minus the closing. You get it? Because it's what? It has not yet been used. Yeah, so we have to take it out because we're focusing on what? The expenses that we incurred, expenses that occurred during the year, things that we have used during the year. You get it? We have not used the closing. It's only going to be used next year when we start production again. You get it? So hence we are minusing out from what? From all our costs that we have. So with that said, so now it should be easy for us to work out what? Work out our total production cost. Yeah, so everything is just going to be easy. So now we have the information that we need. So the only thing now is to add the values, right? Add minus, obviously. So okay, yeah, I'm still trying to master my my Excel, making use of Excel to make things easier. Okay. Awesome. So this is what? This is the total production cost at the end. So this is the amount that we are getting at the end, which is 3,772,630. Okay, so I hope these explanations were a bit helpful to some extent. Okay, I'm gonna fix this one. I think I figured out how to do it. Don't worry, the figures are correct. I'm just correcting certain things on my spreadsheet. Hmm. Okay, yeah, so this is it. You are more than to ask questions. We have tackled, okay, let's see here. They said we need to do what? Prepare the direct or raw cost material, and then they said uh, direct labor cost, right? And then they said factory overhead cost. We did that. So if you got all the marks here, then that's 16 marks that you got. And then we prepared what? The what is it? The production cost statement. Oh, so now we have to answer 1.1.3. They say calculate the unit cost of production per plastic being completed. So now this should be easy, right? Because they say we just need to calculate what? We just need to calculate what is it? The cost per bean. Right. So the cost per bean. So we have what? We have 58,000 beans. So 58,000 beans. Oh, I love this. So obviously how we work it out, we say total cost of production divided by what? Divided by total units produced. Right. So this is our formula basically. So with that now we can put in the figure. So we say 3,720,000 okay, and then 72,630, right? Then we say what? Divided by 58,000. You are more than welcome to do what? You pause the video and work it out yourself. You work it out, I will work it out myself here as well. Okay, 3772. Okay, let me shut up. Did you get it? Okay, so I got 65 rent, 65 rent for, okay, it's 5 cents actually. So this is how much it cost us per single item for it to be produced. 65 rand 5 cents. Okay, so just by doing this, you are most likely to get these marks. I don't know how many they are, 10, 20, 20, 36, 36 plus, it's 43, I think, around 43. Yeah, and then, okay, so this is the last part of it, but this is like a completely different question. It's not related to the one that we just did at all. Yeah. So this is just asking you, like, based on the information provided here, they're saying this business makes plastic vuvuzelas. The information below relates to the year end of 30 June. Okay, they have number of vuvuzelas 12,000, sales for the year, obviously, total fixed cost, variable cost. So saying give one example of a fixed cost and one example of a variable cost. Okay, fixed costs are the costs that don't change as often. They're not likely to change within the next 12 months, right? And then variable costs, they are not, they just depend. Every month they are fluctuating. You get it? An example of a fixed cost, we can say it's what? It's rent. Rent is fixed, right? Depreciation is fixed, see, right? And then variable costs that you can think of, we can say that water and electricity, it's just fluctuating every month. Okay, and then you can think of any other, like if you're buying material, sometimes depending on the inflation, it's most likely the price is not to be fixed. You get it? It is what it is. And then here they say explain why is it important to calculate the expected break even. So expected break even we calculated because it assists us as a business to know that how much are we supposed to buy or produce and sell for us to be able to cover all the important costs in the business, cover all the costs. You get it? So if I'm making muffins in the house, so it means what? It means that um the cost for me to make the muffins versus how much I'm going to sell the muffins. How many muffins am I going to be able to sell before I know that now I've covered my transport, the flour, the eggs, the electricity? You get it? Then I know that after that, now I can start relaxing. Now I'm making profit. Yeah. So you will have to explain it according to your own words. Okay, and then they're saying use the figures above to calculate the break-even point. I'm not gonna do this for you. I want you to try and figure it out. So as soon as you do this one, you can just let me know how much you got for the break-even. And then they're saying comment on your calculation. They always do that. Like you find out that if whatever answer that you got for your break even, you have to support it with a comment to get it. What advice would you offer Mr. Cool manufacturers? Yeah, what would you advise them? Basically, using what? The break even. What would you advise them? You get it? So maybe it takes them longer to break